Welcome, everybody. Merrill Chandler here, your host, your guide to the Get Fundable universe. And this is an EIDL update. I'm actually really proud of of what's going on in Washington. First of all, I don't get into things political, but what I do want to focus my attention on is how policy that is made way back there actually translate down into businesses for you and me, how we can leverage. Remember, I'm all about fundability, all about taking the things that we've been given, our talents, our skill sets, our credit profiles, our borrower behaviors, and leveraging them to the highest effect, right? Well, EIDL, the SBA, Small Business Administration, just came up with a new policy update. And whereas they used to fund based on 6 months, the first EIDL loans last year, they were basically designed to compensate for 6 months of financial injury as a result of the pandemic, right? And it was up to $150,000 total. Now, remember, this $150,000 was to help build back losses we incurred as a result of the pandemic, or being able to use the EIDL funds to hunker down and create a kind of financial cocoon to weather the storm, keep our people employed, keep things going while we weather the storm, right? Well, it used to be 150 grand max for the EIDL loan and 6 months, representing 6 months of a financial injury. Well, here's what's awesome. The new increased loan limits are up to $500,000 and up to 24 months of financial injury. So right now we're on a full, for those of us who were at first impact, right? Patient zero. That was about early March and beginning of April is when we begin to have kind of the effects of the shutdown. So that's a full year as of now. We're literally a month and change past that that year mark, and it can go a full 24 months of financial impact, up to $500,000. Now, they are keeping anything over $25,000. They call it a security interest. Between you and me, they don't even mention it, but it's called a UCC filing. So they put a UCC filing on your business so that they have the first rights of any assets or otherwise should you default on the loan. Now, interestingly enough, it is a government backed loan. The SBA is lending via various lenders, but the SBA is an agency inside of the federal government. So they're government backed loans. So the amount of liquidating your company or liquidating your company is unlikely unless you just go out of business, because even with this help, it didn't matter. Now, anything over $200,000 borrowed requires a personal guarantee. Under $200,000 does not require a personal guarantee. So they not only increased it by fourfold, but the personal guarantee is for if you choose to borrow anything over the $200,000 mark, 200 or more, you as the business owner have to personally guarantee it. Hasn't ever been a problem in the past, because all SBA loans are personally guaranteed, every single one of them. Now, the next thing is that they have extended the first due date on any payment from, and I want to get this right, 24 months from the date of the note. So when you receive it, every one of you received part one or whatever. When you received it, you received a promissory note. when you execute that promissory note or the date of that promissory note, you need to check your language, because in the past the PPP loans were the date of the note, not the date you signed it. So make sure that it's executed, or whether it's the date of execution or the date of the note. It should be only a few days difference. But your first payment is not due for 24 months from the date of that note. And so that gives the interest continues to accrue during that period. So it is being tacked on to the end of the loan, but it is not, the first payment is not due. So you'll basically garner, if you opt in for the deferment, you'll garner 24 months of interest on a 30-year loan. Now there's still a 30-year loans, and some of the ones that have come in from our clients, they're not 1%. These were more 3%, between 3 and 4% loans. Still, though, that's what current mortgage rates are. So for the least expensive possible money, these EIDL loans are available. So you need to talk to the SBA. The SBA is actually taking applications directly to at sba.gov/relief is for the information, and there are buttons on that page to be able to fill out the information. But you actually do not, for the second level or second tier SBA loans, you're completing the application on the SBA website itself and not through a lender. So that's the update. I'm for it. When it comes to the time value of money, you drop in $100, $200, $300, $500,000 without a payment for the first 24 months at 3.5%+ interest. If you're one of my clients, we know what to do with that money. So I just wanted to give all of you guys an update for this EIDL loan, and the good news about it. There are some, it's not bad news, but yes, there's still a lien. So for those of you who are my clients, you do not want to get an EIDL loan for your QFE, because we don't want to, that lien, that UCC filing is going to block any other chances for traditional business borrowing. So we don't want the EIDL loan on your QFE. All right. This is Merrill Chandler, your host of the Get Fundable podcast, the Get Fundable book, the Get Fundable bootcamp, and the Get Fundable universe. Please, and if you like this, comment, share, send this to people who need to know, whether they're business owners, entrepreneurs, so that they know what's up and how to take advantage and leverage this opportunity. You guys have a great day.